In my last stock video, I talked about whether it might be worthwhile investing in CBD stocks over here in the UK. If you guys haven't watched that video, then you can click on the link here to do that. So whilst we're on the theme, it only makes sense that I talk about the biggest of them all over here in the UK, British American Tobacco. But before I go explain what my thoughts are, I think I should let you guys know that this was actually one of the very first stocks I was looking to invest in when I was first starting out. And it's because of the Robert Kiyosaki Rich Dad Poor Dad book. You know, I learned from it that you should invest in things that you like to use, because chances are if you like to use it, other people do too. But whilst I'm not a smoker and don't ever plan on being one, no offense, I knew that this was a business model that was likely to be very profitable. And it's this way of investing that meant I could find gems like JD, Greg's Rightmove earlier on, before majority of the investors started to eventually catch up. But there is this one thing that ultimately made me not invest in this stock. Well, before I go spilling the beans of what that is and how this stock transitions into now 2021, if you haven't already, then make sure to like this video, share it too, and subscribe with notification bell on as well. And that one thing was my ethics and morals. Now, I know there's going to be a lot of people that say, you always talk about not letting your emotions get in the way, which is true, but these are my core principles that I'm talking about here. Not every opportunity that's presented to you is going to be the right one for you. But that's not to say I can't appreciate what the stock offers if it's not a good stock, because what ultimately might not work for me still might work for you, and vice versa. But enough of that. It's time to look at British American Tobacco with our investor lenses. And the first thing I want you guys to take note of is that there's a lot of British American Tobacco stocks online. But just to clarify, I'm talking about the one in the London Stock Exchange with the ticker symbol BATS.L. And surprisingly, for a stock of its size, we're talking about one of the top 10 largest stocks in the London Stock Exchange. They have a relatively low P ratio, roughly 10, which can be seen as undervalued to a lot of investors. But this is kind of balanced out with the relatively high share price, roughly £27 per share. But the more I look at the share price graph, the more I'm thinking I might have dodged a bullet here. Because yes, I was thinking of investing in 2017, but as you can see afterwards, there's been 4 years of decline in terms of share price. But hindsight is a wonderful thing when you have it, and it's useless when you don't. That's why we're going to look at the financials now, to see what this stock is really about. And as you can see, this stock is making money. We're talking about billions of pounds here. Just in 2020 year alone, they made a total revenue just shy of £25.8 billion. Crazy money. But when you look further back and compare it to previous years, to me it just seems like this stock is stagnated quite a bit. And this also works down to the total operating expenses, eventually leading to the net income too. I mean, just look at the net incomes for the previous years. It's not hard to see that the stock has stagnated quite a bit. But one thing I'm glad to see is, even in their form of decline, they still know how to make money, guys, with roughly a profit margin of at least 25% each and every year. That's quite impressive. But this is just one of 3 documents that should help you determine whether this is a good stock or not. Let's check out the balance sheet. And for me, I don't like what I see, guys, because one must have with any decent stock that I like to invest in is that I need the current assets to be able to cover the current liabilities. I would rather have it this way than the other way, than the non-current assets being able to cover the non-current liabilities, because at the end of the day, if you're short-term borrowers, people that give you money want the money back in a short time frame, how are you going to get the money if it ain't there? Chances are you're going to probably have to take out another loan to pay the residual debt, and then you've got that debt to worry about now, going down the same spiral staircase. And that's not even the end of my rant, people. They've got so much money in the goodwill and intangible assets section of the balance sheet, roughly £115 billion. And if you guys have been watching any of my investment videos when it comes to stock market, you guys know how much I value this section right here. Virtually nothing. because it gives stocks the opportunity to fool investors and trick you into thinking that a balance sheet is good when really it is absolute trash. So in other words, when you look at the total equity, the final value, this is the most valuable part of the balance sheet. Those positive signs that you see for each and every year, you need to subtract £115 billion from it. And as you can see, that leaves you comfortably in the negatives. This stock does not have enough true assets to cover its true liabilities. Now, I know it's probably easy to tell what I'm thinking about this stock in general, but let's suppress that for a bit and check out the third and final financial document, the cash flow statement. Because the cash from operating activities, overall, the picture seems like this stock is on a decline. When you look at the cash from investing activities, yes, it may be massively negative for the most recent years, but when you look at the previous year and how more negative that was, that would suggest that this stock was willing to take out more investments to grow the brand further. They're approaching more of that positive region, which is not a good look. And the cash from financing activities is a similar sort of thing. They're getting more and more positive throughout the years. Eventually will come to a stage where they're starting to borrow more money than actually paying back their debtors, going down that same spiral staircase like we once discussed. To me, it just appears that this stock has stagnated quite a bit and might be on a bit of a brink to a decline. This is why I stress how important it is to make sure the stocks you're investing in is investing themselves. Otherwise, you're investing in a dead cause. I still think that stock has a long way to go before this becomes a serious problem just because of how big they are. But it's about solving these small issues straight away before it spirals into something that becomes much more challenging to deal with. But that's just what I think. Let me know what you guys think in the comment box down below. What's your thoughts on British American tobacco stock? Would you invest in it? Have you invested in it? And if not, why? And while you're down there, make sure to like this video, share it too, and subscribe with the notification bell on as well. It's your favourite YouTuber, Design Finance, sharing my thoughts, my experiences with you guys every Sunday at 3 PM. Have a great day, people. Bye.
Whoa.